Hello, Warriors. Hi, Didier. How are you? How's everyone doing this early Monday morning? Thank you very much, Arena and Brock. Good morning, Sinatra, Hugo, Kevin, and Didier. Let's take a look at what's going on around here. Feature right here is this a head and shoulders breakdown? Could be. Okay, so last week ended up being significant. See if we could follow through. The measured move is going to take us to about 3,800. Unless it's a false breakdown, you always have to be aware of it. You still need closes under the neckline here. Okay. And here we are in the pound on the verge of topping, in my view. All right. So I'm looking for a possible three up here. Here's, 1, 2, 3 diverging. Still a lot of strength in the commodity currencies, too much momentum. And you know what? How about a tip of the hat to Blake Morrow talking about USD MEX on Friday while the S&Ps were up around 20 handles, talking about that it could be a signal of risk off coming because it wasn't making new lows with the S&Ps making new highs. Hello, Ponce. So nice call, Blake. That is really something everyone should work on. It's having a feel for everything, the whole jigsaw puzzle, what different types of currencies mean, and what risk on, risk off means, and how they normally behave, because that's how you can distinguish a market tell by seeing something that's happening that shouldn't be happening, and there's a market message in that. So USD MEX, made lows before the market topped. So a very nice call by Blake on USD MEX that kind of led the way of the S&Ps beginning to be under pressure here. So uh, daily looks ugly. Okay, we'll see if it turns impulsive. I know we have Paul. Probably some of the bulls are hoping Paul or the PPT comes in. We'll see. Hard to get short S&Ps in the hole. I was doing it here last week and covered at 9:15 and started thinking maybe we'd get one more push up, but Friday's action was so sloppy. Well, that's not necessarily true, Jay, because we do have risk off, right? And we really don't have a big bid in the dollar, right? This is pretty good sell off. Nasdaq's down 1 1/3%. So there's not a lot of action going into flows going into the dollar with equities under pressure, which is, what everyone was expecting. Um, I could take a quick look at the Aussie. On the daily, there is some divergence up here, but look at the momentum on everything else. This was kind of confirmed. It's over 80 on the 4 hour. It's confirming here on the 2. So you probably have to go the 15-minute to show some divergence. Okay. We had that breakdown in crude and crude snapping back right now. So we'll see what crude could generate. Could it generate one more high for a 3? Or is this just going to be a failing rally? I think it was Mark Newton showing a broken trend line here in the crude. So, this has been relentless. So we'll see. We'll see what happens here. Okay. And Blake, really nice call on noticing what USD MEX was doing before the market came under pressure. And you gave people pretty good heads up on that Friday before it happened.
Thank you, Coach.
You're welcome, buddy. So that's why I advise everyone to listen and to join you on the mid-session update that you do, because as things change from what we talk about here early in FACE, besides getting the bias chart, to be able to touch base with you mid-session, I think is an edge that people need to take advantage of.
Well, thank you. I, I wish all my calls were that good, because they're obviously not. But there are certain things that you learn about the market, certain dynamics that are important to pick up. And this is where you often say, Dale, experience counts. And when you've been trading the markets as long as I have, you pick up on certain things and certain characteristics. And there are times when things don't work, and we've been in a long period of that too, where we get a lot of false signals, a lot of broken correlations, and that tends to happen when we're in a explosively bullish market, which we are in right now. But we are starting to see some things that are definitely giving us some warning signals, right?
Yeah.
I
Yeah.
mean,
So
what
go ahead.
what else are you really looking at right now that could signal, that stocks might pull back? And by the way, I know we're on key support in the S&P, and like you pointed out, and we pointed out on the week ahead video as well, we have Powell tomorrow. It's
Right.
really hard to hit the bid right now in stocks, knowing that you've got Jay Powell tomorrow and the next day,
And
right?
there's also talk, Blake, about having a decision on COVID relief bill by the end of the week. So, I think
Yeah,
that
yeah,
again,
absolutely. The
yeah,
stimulus package is probably going to, I mean, I don't know if it's going to be the 1.9 trillion that everybody had talked about, but there's relief coming. And that's a fact that you're pointing out. So
yeah.
you got
So
that, you got, Powell. What's Powell gonna do? Do you think he's gonna sound like uber hawkish?
no, he's going to make the case again, just like Yellen. I saw a press conference with Yellen, and she's saying it's so very important to go big on this. A lot of people think just because the stock market's up that everything's okay. There are a lot of people that are really suffering, and so he's going to sing the same tune he has for a while, how critical it is for us to have a fiscal rescue package for the country and for the economy. That's what I
Yeah,
think he's going to say again.
I think he's gonna be extremely cautious as well. He's not gonna be a hawk. He's not gonna sound hawkish. And I wholeheartedly agree with that. That's why it's imperative that, yes, we are on important support levels here. I look at the dollar Mexican peso, and I just actually moments ago moved my stops to break even, and I
Why don't you
took a
take over
50.
the screen, buddy?
Oh, yeah, yeah, okay,
Yeah,
I'll
so
do
they
that.
could see your charts, which are a little bit more intricate than my who was that guy again? Simple, stupid. Oh, Forrest Gump. My Forrest Gump charts.
Well, so first of all, you can see dollar Mexican pesos, like, right up on my very important chart for me. Uh, we've been talking about this for a very long time. Now, I'm going to show you a couple of things that are what I would call cracks in the surface of the market. One of them being the dollar Mexican peso. And so let me take a step back really quick, and let's just go to the S&P. So here's the S&P, and I'm not going to go through every chart, and just so you guys all know that I go through all of the major instruments and the charts, and writing down all the key support and resistance levels with the Forex Analytics subscribers in about 45 minutes, and it's private for them. But there are certain things that I like to talk about on this particular webinar, that is obviously free to you guys. And I want to make sure that we are talking and hitting the key components of them, because look, the S&P, this is a head and shoulder pattern, which we have been discussing. Key neckline. Let me get rid of this really quick. These we're below all these little spike lows from the last couple of weeks. We're basically testing 3870. And yeah, it's at this moment, it is really hard to get short right now. It really is. And I'm gonna tell you right at this moment in time, this is where if it does work out on the short side, it's going to pay those people that were in early handsomely, because that's the trade that would make you sick right at this moment, right, Dale?
Yeah. Yeah.
Just
So, yeah.
Yeah, just stepping in and shorting right now. But this is obviously key support in the S&P. We've been discussing it. 3870 is the breakout point. Here we are. And even early in European trade, we already pushed below it, and back up again. Now, where are the cracks in the surface? Well, as Dale and I were talking about, this is the dollar Mexican peso. One of the things about the dollar Mexican peso is we've broken above resistance the last couple of days of trading. We closed above the 2033 level, which was very important to me last week. If you were, listening to my dollar Mexican peso analysis last week. And now that we're pushing up against previous support, which is current resistance, I did take a little bit off the table and I moved my stops to break even. It only makes sense, because
Yes.
what if Powell says tomorrow, which is highly likely, rates are going to stay low for the next 42 and a half years, and we're going to continue to put liquidity in the market. I'm just
You said something very important, and if you guys aren't doing it, always take partials. You never know if a move is going to turn into something that's going to run, or it's has to restart. And if you put money in the bank, you're getting paid. You have to take partials, right, Blake?
100% agree with that. I do. And like I said, these are the types of trades, and this is what Dale's saying. This is a trade that I would expect makes a move towards back into the mid 20s. And if it does, you want to be able to participate in it, right? You don't want to not be in it. So out of my full position that I had, I took a fifth off, actually right around here this morning in the 70s, and the rest is running. Stops have been moved to break even, and we're going to let it go. And here's the thing, we're pushing above resistance. How about if we get above the 200-day moving average? Then you start getting above the 200-day moving average. Then you start getting momentum behind it. And then if stocks are going down, then you got double momentum, and this thing really takes off. Now, this isn't the only currency pair that looks like this. And there's a couple of other currency pairs that are threatening. One of them is the US dollar Norwegian krona. I mean, look at this is obviously going to be a currency pair, which, some traders I know that are just like, dude, everybody I know is long Norway, and they've been hiding out in it because it's been a nice, quiet grind higher in the Norwegian krona, with the reflation trade, crude oil going higher. Norway has just been rallying. But what we've seen in the last couple of months is the US dollar Norwegian krona has double bottomed. It stopped going down with risk appetite. And now we're above this this is since the COVID spike high, we're above that trend line. I know Stelios is here, and by the way, Steve is out today. He had an appointment he had to run to, so it's just going to be Stelios and I and Dale before the guest that comes in today. But Stelios probably has something to say about this, and I'm gonna hey Stel, I'm gonna say that those highs that we saw this last spring, during the COVID spike, those are levels I'll never see again.
I agree.
In my career, my lifetime, probably. I might be 6 feet under by the time that we see anything above that. But I think between now and then, that doesn't mean that we cannot get back towards 10, 11. You know what I mean? Yeah. I think this is a generational high, if you will, but that doesn't mean we can't do one of these.
Blake, you're saying this and that, and this break. What you didn't say is that you saw Stelios 2-3 weeks ago saying, I've been long Norway for years, and 3 weeks ago roughly I just closed everything. And I'm very worried because we're getting the oil price move and the krona is not doing anything. So what happens if we get a nice risk-off move?
That's exactly my point, Stelios. As I was saying, that crude has been extremely resilient. Stocks have been pushing to all-time highs, minus the European indices, but we've had North American, markets moving higher. Then we have the US dollar Norwegian krona that's not moving lower anymore. US dollar Mexican peso, same thing. You could actually argue that the dollar Canadian, even though it made a brief new trend low last week, that might have been some option expiration stuff going on, but it's made very marginal new lows. Then on top of that, and again, this is me pointing out some of the cracks beneath the surface of the equity markets that we're dealing with. And Nick has a good point too, and I'll go up. I can go to that in a second because I typically don't cover the U.S. dollar CNH, but look at Apple, guys.
Yeah, you talked about that last week too, before the breakdown.
And pre-market we're down another couple bucks.
Yeah,
pre-market we're trading literally near this, head and shoulder support. So, but when we are below this trend line from the COVID spike lows, that's the largest company in the United States and in the world. So, when it's severing an uptrend line, a bullish trend line that we've seen for the last almost year, you have to be careful. These are the cracks in the surface that, it's like here we are skating across, some ice in the end of February when we have global warming. Right? That's I'm obviously trying to use a bunch of analogies that, may or may not make sense to you. But we're scurrying across some, maybe an ice pond that's, typically every winter we think that the ice is pretty thick, but during, this year it's a little bit warmer than normal. Maybe that
NASDAQ let it up and NASDAQ's leading it down.
Yeah, that's another point. That's actually Mark in our chat room. Yeah, and by the way, I have to say this. This is our chat room. If you want to be part of the Forex Analytics family, this is what's really the heartbeat of where we're at and what's happening here. I'm just going to show you from the time that I got up. And somewhere around here, right? Yeah, right here. Good morning, everyone. Right. So that's when I say good morning to everybody. This is all the chatting that's gone in here for the last couple hours. Now it's pretty quiet, and I want to say it's pretty quiet because we actually don't have Amanda in with us today. She's got some personal things she's dealing with for the next couple of days, family issues, and usually she's out there chatting quite a bit. But that's part of the Forex Analytics family. And Mark, who is a really, really nice welcome addition over the last year to our chat room, he was mentioning, hey, the NASDAQ's the weak link here. And I could not agree more. Look at, and Dale, you've been around doing this thing long enough.
Yeah. Too long.
What happens when, your leadership goes away?
That's right. Yeah. So that's been a sign for a while. That NASDAQ higher beta than the S&Ps. So, when it's higher beta, it outperforms and underperforms depending upon it. But, definitely NASDAQ was weaker all last week. Any rally, it was, S&Ps could be up 5-10 handles and the NASDAQ was still down 70 points. So all week last week, it was flashing this signal. And I think a lot of people talked about the higher rates is kind of negative tech. I'm not exactly sure why, but maybe it's valuations on tech that they're reassessing with rates tripling. I know everyone goes, rates are still low, but they did triple. So it's
Yeah,
got
and Stelios, what do you have to say about the bond market? Because the bond market, we're seeing these rates and rates rise. What do you think Powell's going to say about that for the next couple of days? What do you think?
Well, Powell, for everybody remembers, he started off very, how should I put it, looking very neutral and very encouraging in terms of a breath of fresh air as a chairman of the Fed, but he's become a big dove, and he just has been at every occasion as dovish as he can possibly, theoretically be. So I don't see him changing this tune. And I know they're definitely looking at yields. And if you look at the 10-year US yield, we talked about this on Friday. We're right entering this zone now between 135, 150-ish, which is huge resistance. And if that breaks, I mean, there's going to be trouble. So I think Powell is going to be dovish. I mean, I don't know what you think, but I don't see any other way. I really don't.
No, he has to be, because if he's any type of hawkish, bonds are going to get crushed, yields are going to fly. Then what happens, right?
Yeah.
I mean, are we in a little bit of a pickle here? With
and sorry to interrupt. One other thing that Ben is writing, which is so important, is not only that low yields help borrowing. Companies can borrow a lot easier, etc. It's also when you use discounted cash flows to discount your future cash flows to today. When you have low yields, then valuation is higher. When you have high yields, then the discounted cash flows are lower. So that drops valuation, a company valuation. So this is very important for stocks, right? For indices, as a side effect of what yields do.
All right. Well, we've got this big move in yields, and what else we've seen? We've seen a big reversal in Bitcoin today, and I mean, I was really looking for a move just above 60,000. And if you watch the week ahead video, that's what I was really hoping we'd hit, this confluence right around the 62,000 or so. But really, we're coming off quite aggressively, and I know we've talked a lot about it the last couple of days, guys, but what happens when, your most risky asset starts to, come down? How does that affect psychology in the markets? What do you guys think?
So
go ahead. So
no, I was just going to say, I think cryptos are in the last few weeks, months, have been very much in line with risk appetite, and they're sending a signal. Obviously, when cryptos are flying higher, it's all euphoria and everything. But a turn in cryptos will send a negative signal, and you know how psychology works with markets. So I think it's definitely not helping markets. That's for sure.
This Dogecoin is a great example of the excessive risk taking in the market. You've got a cryptocurrency that was actually created as a joke.
Really? I didn't know that.
Yeah. Yes.
And then you got somebody high profile to talk about it and pump it. And there you go.
Yes. Yeah. So anyway, we've got all that.
Does it come with a leash?
It's just
when you want to take your
doggy
coin
guys,
for
this is excessive. If you guys want to really, one thing that you guys should do, just to think defensively, doesn't mean you have to trade defensively. You just always have to be thinking, especially when things are as excessive as they are. It doesn't mean you need to run out and start shorting stocks. That's not necessarily what you have to do. What you have to do is start opening your mind to the possibility of things that could happen, and how are you going to be playing defensively against it. There's a there's a really great interview from Bloomberg. It's about 45 minutes long. It's Jeremy Grantham.
Oh, yes.
You know who that is?
Yeah. Yeah. He's
And
called as the bubble of all times. Yeah.
yeah. He is the CEO of oh gosh, which fund is that? Is it GMO, GNO? I'm trying to think. Anyway, he's obviously, very, very pessimistic on the market, but he's also a huge hedge fund manager, and he's like one of the, great investing legends. So I tend to take a, look at what he has to say, or at least a view of what he had to say. And he had a great interview. I think it was like last month, and it's worth watching if you can find it. And it's about 45 minutes long. And and it's all about excessive risk taking in the market, and where that could lead us. And I think it like I said, it's worth revisiting some of those things. And I watched that video. I watched that interview about a month ago, and it's been sticking in my head ever since. And that's what's been keeping me really more on the defensive. It's like, I can't chase any of these things higher. And I look at the Aussie, for example, and the Aussie is a great example of and this caught me off guard on Friday. I did not expect the Aussie to rally. I didn't expect it to break out. I didn't expect it to break above the 78.20 level. I just did not, but it did. And I'm wondering if this is like one last gasp, taking every short out before it rolls over. And if you guys watched the week ahead video, I was talking about copper, and I was talking about the risk in copper right now, that we just hit the 161% extension. You can see that.
Wow.
Right?
Yeah.
DSI was at 30, and I don't trade copper. I probably should have in this case, but DSI was at 93 over the weekend, and that is extreme. And we pushed through some resistance. We've reversed. I wouldn't be surprised to see Aussie close lower this week, get a false breakout, if stocks are, obviously pushing lower by the end of the week as well. But those are things that I'm really keeping an eye on. How about you, Stella? What else are you looking at?
For me, the main thing has been yields, but the situation in equities is a little bit worrying. Obviously, we haven't turned yet, but like you said, we're very close to going down below the breakout point. And if you look at the daily chart on the S&P, there's a big ascending trend line which comes in around 3,800, and this will drive a lot of things. It will drive the dollar, will drive gold and silver. So I'm definitely watching that. And, if you look at companies like Tesla, they're down quite a bit today in pre-market, and they're actually looking like they're going to make a new low now. And that's worrying. So you had 5 or 6 big names driving the market higher for months and weeks. And, Amazon, Tesla, definitely some of them. So if you see those leading the way, then you got to be careful. So
and I want to reiterate this, Stelios. It doesn't make sense right now to hit the bid in stocks. It just doesn't. We're at support.
I agree 100%.
And we've got Powell speaking tomorrow, and he's going to testify. And we all, I think the consensus agrees, right, Dale? He's going to be dovish.
Yeah.
How can he not be? So why in the hell would I want to sell stocks today? But if I was long, and if I was a fund manager and I was long equities, I would be really concerned right now. I'd be really concerned at the price action that we're seeing. I'd be like, man, we own equities. They should be going higher. There's everything in the world is telling us we need to be long equities right now. Yet they are not looking good. So
cash is a position too.
What's that? Cash is a position. Yeah.
Too.
Yeah. And so I've got to say that, if for some reason we see a misstep by Powell tomorrow, something he says that, whether it's he's a little too hawkish, maybe he, talks about, a little bit too much liquidity out in the market. Maybe they, need to consider whatever tapering bond
Sometimes,
purchases.
yeah,
I
sometimes
can't see them doing that, but
yeah, sometimes it
sorry.
takes a fall in the market to get the legislatures off the dime. The first TARP was voted down, and the market crashed the next day, and then they passed TARP.
Yeah,
So
Yeah.
sometimes it takes every news station to be talking about a massive market decline to get Congress to act.
right. That's
Yes.
that could do it and maybe push the needle on getting stimulus done. Hey, really quick, I know you have an interview. So
Yep.
I got to mention two things, guys. If you haven't visited our sponsored Forex Analytics sponsor for the FACE webinar, it's Pepperstone Securities. Open an account right here using this link. You can get up to 4 months free of Forex Analytics. Don't pass that up. Open an account if you're outside the US or Canada. And if you haven't bought the book from your favorite Forex Analytics analyst, which would be Stelios
You.
Kontogulis, learn about truth and LIBOR and the LIBOR scandal that overtook the markets. How many years ago was that?
Well, it started with a crisis. So 2008, 2009, the whole thing started. Slowly.
Yeah, okay.
When they went looking for scapegoats. So
Yes.
Estelle and I are going to be talking about his book on Friday, Blake.
Yes, great interview. I can't wait to hear Stelios. I'm hearing his voice right now. All right. Yeah. So anyway, have a great interview, Dale. And thanks everybody for listening in. And I'll see the rest of you guys and gals in 45 minutes on the Face 2.0 or the Morning Edge coming up.
Hello, Katie. Katie Stockton is with us now. I just made you a panelist. Welcome back, Katie.
It's good to be back.
Oh, there you are, Katie.
Yep, good. I just found the mute button.
All right, beautiful. So nice to have you back. How have things been going? We've had a little bit of interest rate pressures in the market. If you want to share your screen, it's at green box.
Yes, let me do that.
Okay.
So yeah, certainly. I mean, it's been really a crazy few weeks for the markets on so many levels, and it feels like it's never going to let us rest here. And I heard your commentary from earlier, and it seems like we may be, on the same page to some degree. Can you see the screen here?
Yeah, we have all your charts up here, and we're looking at the S&P daily with looks like cloud support underneath it. Okay,
That's right.
So tell us what you're seeing, Katie.
Well, yeah, we can start here. You can see, obviously, the intermediate term uptrend has extended itself pretty dramatically this month. And, we've seen some consolidation develop in the last few days or so, and that's been pronounced this morning in the S&P futures. And with that, we've gotten downturns in our short-term gauges, and that includes this here, which is the daily stochastic oscillator, coming down from 80%. And notice that's happened a lot, right? So that in and of itself isn't too big of a deal. Then it's combined, however, with a MACD sell signal. This is the MACD indicator, standard parameters here, short-term trend falling gauge. When you get this crossover, you have a loss of short-term momentum that's somewhat meaningful. The design of these indicators is to eliminate noise. So it's said, okay, stay with the market over the past couple of weeks, just until the last day or so. So
what do you do, Katie? You're a registered investment advisor, correct?
That's right. And I publish research. I don't manage money, but I do publish research that's all technical in nature. And I think when you see the S&P 500 dip below this 3871 level that's highlighted on the chart, this is a minor former resistance level from January. Right. That would be a bit of a stop loss from a short-term perspective in my world. I think it's where we want to increase hedges or decrease exposure on the long side to U.S. equities. Because when you think about the next support levels, I think we would be hopeful to think that this 50-day moving average in green is going to act as support again. It's about 3% below
3,800. Yeah.
Yeah, just below. I think that would
Okay.
be somewhat hopeful based on where we have our indicators. The cloud and also this former support or former resistance here, 3588, those would
Yeah.
be a more natural place for a pullback to discover support and finally mature. What my thinking is that we're actually going to get into somewhat of a frustrating sort of trading range environment potentially for a couple, maybe 3 months. And I say that not because of what you're seeing here on the daily bar chart, but when you look at the monthly bar charts, of course, I have Bitcoin pulled up here on my Bloomberg terminal, and for a good reason, right? So we can talk
Yeah.
about
You
that
always have to
as well.
watch the star of the show. Yeah.
I know, and I too am watching it as a bit of a risk metric. But here's the monthly bar chart of the S&P 500 with the DeMark indicators. If you can see these numbers floating above the price bars, the DeMark indicators now have what we call sort of a 9 sell signal. So it's where you see this 9 and red arrow, and you tend to see a few bars of consolidation on the back of that. Now, being a monthly chart, that means a few months of consolidation, and wouldn't that be a healthy and a welcome development from a long-term perspective? Long-term momentum still very much positive, and we don't expect that to change. But certainly we need some relief from these overbought conditions based on both those DeMark indicators and things like the stochastic oscillator. We have not yet seen any deterioration in our intermediate term gauges. So far, we've just seen short-term deterioration. But my thought is that with the potential for this trading range or consolidation phase to unfold, that we'll see a loss of intermediate term momentum with that. And because of that, I would be managing risk here. And yet there's also ways to take advantage of that on the upside too.
Didn't DeMark have an exhaustion sell about a week ago on a Friday?
I believe
On the
so.
daily, I
Yeah.
think on the daily, Katie.
Yeah, so I think they were looking for a propulsion level up to about 3907. The
Okay.
high here, of course, was 3950, so that was
Yeah.
exceeded. I'm
Yeah.
not sure exactly what Tom was looking at, but suffice it to say that there are signs of upside exhaustion per his indicators. I use only two of his most popular gauges, TD Combo and TD
Right.
Sequential, so there are certainly more sophisticated users out there of his work, but it does enhance what we're seeing in these stochastics and supports at least 2 weeks of corrective price action here.
You know,
Uh,
today I've reached a point of exhaustion. I get up at 4 in the morning.
I feel you, Dale.
All right, thanks, Katie. So, all
Yeah.
right, got a little bit. So the view is we could be in for just some consolidation. Would
Mhm.
you say worst case would be the bottom of the cloud and some of those moving averages around
Yeah.
3,400?
I think, right. I mean, this is the 200-day moving average,
Yeah.
34.24. I don't think we assume it's going to be of that magnitude because
Okay.
we don't have the loss of intermediate term momentum that would suggest it's a correction, not just a pullback.
Okay.
It may just be a matter of time. I tend to look at the indicators more than I look at the levels. The levels are great for guidelines, but it's really a setup in the indicators on my end that would suggest, okay, here we have a buying opportunity. And that's when we see a lot of this, so where we have a lot of securities flashing these oversold upturns. Last time that occurred was very late October, early November. So it doesn't happen that often in a bull market. So we'd pay attention if we get that kind of oversold upturn, of course, on a short-term basis. And then also we tend to watch the market internal measures. So we have a
Okay.
morning note, and that those market internals tend to flash these oversold extremes. It doesn't have to be a buying climax, but usually you'll see sentiment get overly bearish, and certainly that's not the case now.
It's interesting, a statement that most people would not make, that you're pretty much saying that your indicators are more important, even though they're developed by price, but they're more important than just looking at a price chart. Is that what you're saying here?
Right, so they're derivations of price.
Right. Okay.
But to me, what they do is they give us sort of a black and white result, right? They
Yeah.
eliminate some of the gray area of focusing on levels. If you think about any support resistance levels, and really they're such a gift from the charts because they do help us discern risk and reward. But there's just too many market participants to allow for these levels to be precise, right? So
Yeah.
a support level, think of it always as a cushion. exhaustion. And that's why we really lean on those indicators to say, okay, well, we've finally discovered support and now are ready to move higher, because that support discovery can take some time. If you look just as a case in point, back in September, right, we saw an oversold reading registered on the 9th and it came right into its 50-day. Was that enough? It wasn't enough. So we like to watch that MACD to turn and give us a little bit more confidence that a turning point is behind us, right? So we're not trying to top tick or bottom tick, but rather capture the bulk of these moves. And that goes for the long-term charts as well. That monthly MACD that you saw, what a great tool for really avoiding the major downdrafts. And as much as these indicators are largely lagging in nature, they get you out just in time to really miss the ultimate downdrafts, right? So if you want to stay the course, be long-term and focus, I think that's okay here if you can live through these sorts of sort of short-term volatility events, if you want to call it that. But if you look at this monthly MACD back to, let's say, 2008, it gave a sell signal in November 07. So would have had you out for most of that time, right? And then before that, if you go back to 2000, we had sell signals start to develop in early 2000, which again was enough to get you out and got you back in mid 2003. So something as simple as a long-term trend following device like that, I think can be great to have on your side.
Okay, very nice analysis.
Thank
Were there any other instruments you wanted to cover here today?
Yeah, I mean, of course, I think we should address Bitcoin. I'm somewhat reluctant, but I do think it's really informing market sentiment. And my message to my subscribers has been, the day that you come in and Bitcoin's down 10+% on the day, which of course none of us can rule out, that's when you've probably got a crack in that sort of risk asset chase. Now, certainly Bitcoin, regarding the DeMark indicators, does have sell signals. I'll show you what that looks like. You see this 13 and this red arrow. It has happened in the past without implications, but the difference this time is it looks like we're about to get that overbought downturn. So, wouldn't it be healthy to see this pullback to even perhaps the 50-day moving average? Unfortunately, that's 25% below. But that would be healthy in the big scheme of things. The good news on Bitcoin for those who are trafficking in it is that these are really only short-term signs of exhaustion. So I think as it pertains to the broader market, that we can assume for now that it's a short-term pullback that it's in store for. You see it in the VIX this morning up about 9%. So I think we're getting going here in terms of that volatility event.
Okay, nice look. So just pull back because long-term momentum is good. A lot of people are talking 6 figures or higher. And, some of the real good people were talking about it when it was, well under 10. So,
That's right.
Okay, so Bitcoin is really the, I guess you have to call it the best roulette table in the casino. Anything else on your radar you want to talk to us about?
Well, we should address the Treasury yields, right? Because that, certainly they've been positively correlated to the equity market as is normal recently. So we can expect that with the S&P 500 and major indices in the U.S. poised to pull back, that we can probably expect the same from Treasury yields. But I'd want to make sure to highlight this as a major shift. So if you look at the monthly, here's a MACD crossover that supports this long-term turnaround that I believe we've seen. It was the breakout on the weekly chart. You can see above this 1% level.
Right.
That was a completion of a big basing phase. And then you have this cloud having been exceeded, just another resistance level. So all of that favors this uptrend, albeit likely to become a bit more gradual as, you see those overbought conditions to some degree take their toll. So you could see 10-year Treasury yields perhaps coming back into the cloud-based support now. That's 1.14%. And with that, you can imagine that the defensive sectors of the market are likely to actually
rally, like utilities.
Well, at least, utilities actually do look poised for an oversold bounce in absolute and relative terms, but to outperform. So of course, outperformance in a weak tape doesn't necessarily mean it's profitable in absolute terms. But if you look, this is an RRG. If you've are you familiar with this, Dale?
No, I'm not.
It's a really neat sort of way to look at sector rotation and other rotations on a normalized basis. It was developed by Julius de Kempenaar out of the Netherlands, and they've licensed it to Bloomberg here. And it's a relative strength reading and then the momentum of that reading. And if we were to animate this, you'd see a clockwise rotation around the middle, which is representing, in this case, the S&P 500. So notice energy, financials, industrials, staples, they're all pointing up and to the right. That means they've outperformed over the past few days. This is just a 5-day view. But now if you animate this and you see this clockwise rotation, look at what's going to sort of bring up the rear here. It's healthcare, utilities, REITs are coming around, staples still with a decent trajectory. So I think that, it would be natural to see some of these defensive sectors, which are also showing some signs of downside exhaustion from a short-term perspective per the DeMark indicators, start to perk up a little bit and outperform and be perhaps a safe haven along with gold prices, which are now bouncing off support. So there are ways to position through this kind of volatility.
Is this chart only available on Bloomberg?
No, I believe Julius has a website, and forgive me, I don't have it on hand, but he does. If you just Google it, I'm sure you can find it. Just Google RRG. And I think it's offered also via Optuma, which is another great software platform for charting.
Okay. One of our attendees just posted it. So
thank
wonderful. You very much.
Thank you.
Yeah, I've never seen it before. It is a great way to see. It's kind of like a relative strength meter for you.
That's right. And if
strength.
You can really see the cyclicality. Well, maybe that's not the best example, but you can even see it on the group level. It's really pretty fascinating. You can break down, say, the semiconductor sector, and you'll see the rotations within the sectors. For those, those are the listeners who are market neutral or sector focused. I think it could be a fantastic tool to see where things are, out of line with their positioning, that type of thing.
Katie, your analysis is elite, and your demeanor and the way you explain it and your tone is, builds confidence just listening to you about what you say. And really glad that we had you back. I'm sure I'm not the only one, but for people that are interested in your work, what's the best way for them to follow you and subscribe? You could show your website if you'd like.
That's a good idea. Yeah. So, well, thank you first for the compliment. That was very nice of you, and for giving me the opportunity here.
Yeah, it's not patronizing. I mean,
no, I appreciate that.
And it took, and you know what? It didn't take long for you to get like the major points across. So it's really crisp too. So
well, yeah, and that's what we try to pride ourselves on. So it's fairleadstrategies.com. You can sign up for a free trial of our research. We have plans that range from our sort of basic plan, which is less than $2,000 a year, up to premium plan services, which are more consulting in nature. And we actually sort of become an extension of trading desks and service a lot of institutional clients that way, where we're doing project work and giving them constant feedback from a bottom-up perspective. We produce 3 research reports per week, one of which is sector focused, another is more top-down oriented, but always with biases on the U.S. equity market, crude oil, gold, the dollar, Treasury yields, and sector relative strength work. And then we have a daily report that is a nice cursory overview for those of you who are trading actively. And it looks something, I can show you this morning. So it looks something like this, where it's just a quick one-pager, S&P futures, on the 60-minute chart, quick bullets. We talked about Bitcoin this morning just because of its relevance. We highlight some DeMark signals. We highlight some market internal measures. So hopefully that intrigues some folks. We also are on Twitter, albeit not super prolific there, at Stockton Katie, and you can find us on LinkedIn as well.
Katie, thank you for your giving spirit and sharing your views with us today, my trading warrior sister. I appreciate it. And
Of course, Dale.
yeah, and maybe we'll have you, not maybe, let's have you back, say around the May timeframe and
Perfect.
see what things are happening. I'll hit you up on Twitter. Everyone, Katie Stockton, giving you some concise, clear, actionable ideas and at least some good warnings. If you're flying blind, I don't think you are after this interview. So thanks again, Katie.
Thank you.
All right, everyone. So that's a wrap. See everyone for Turnaround Tuesday. Good hunting the rest of the day. You could join Blake and the team for the bias chart in about half an hour. See everyone later. Remember, don't just count your pips, count your blessings. And we'll see everyone for Turnaround Tuesday. Adios. And thanks again, Katie.
Of course.